things I do in my trading is I use a lot of tools to determine what is working in the market. I use TradeStation, I use Multicharts, I use NinjaTrader, and this is the Multicharts Portfolio Backtester. You can see it says up here Multicharts 64 Portfolio Backtester, 250K portfolio stock indexes. We were recently trading a portfolio of 60 strategies. And I just have the stock indexes in this strategy. They're the most heaviest weighted and make a bigger difference each day in our trading, especially the NASDAQ. And so we wanted to determine what is going on, what can we do to make this portfolio work, what is the bias in the market that is working the best, what has worked historically, testing this back to 2017, so about 7 years ago, a 7-year ago back test. And I'm going to show you what this looks like with the filters. I've added filters and I've used global variables. And what is the global variable? I've changed the code for my research purposes, and this requires open code. And I have open code for all these strategies because they're my strategies. The broker here doesn't matter. I'm not using these for automation. They just kind of showed up as Binance or Interactive Brokers. I'm not actually using those brokers in this setup. This is just for a back test, and so the broker doesn't matter. But I'm using global variables, and global variable is simply a function that I've set to true or false or have a condition. And so, for example, I might have a global variable that says take long trades or take short trades. And it usually starts with global take long trades or global take short trades. And I've added it in the code for each of these strategies. And so what I can do is I can simply go into that function for global take long trades and set it to true. It's already true by default. The short trades are true by default. But what I've done in this back test is I've taken that and made it false. So it doesn't take any short trades. And I do have a global condition function. And it says to, and it's by default, it's just set to true. By default, it is true. And so what I've done in this backtest is I've taken that global function and said time is greater than 11 o'clock. So essentially what this is a backtest of are the 34 strategies in the 250K 60 strategy portfolio. There's 26 strategies that are non-stock index. There's 34 that are stock index strategies, and we take only long trades and we take entries only after 11 a.m. And this is the back test. It is right near an equity peak, taking long trades after 11 a.m. Don't take short trades at all, and don't take long trades before 11 a.m. Massive chop at the open we've seen lately, and historically this does well taking the results. So what I'm going to do is I'm going to pause the video and I'm going to take these global variables. I'm going to set them to I'm going to turn the short trades back on. I'm going to take the global condition and set it to true so there are no filters, and then you'll be able to see the difference in this portfolio. And so taking trades near the open has been a big chop fest for us. Taking short trades has been difficult, and so you can see the results here. Let's look at the I'm going to do a screenshot. I'm going to pause the video, do a screenshot of this so we can compare it. You get the total trade analysis. They're all long trades, almost 10,000 long trades in 7 years. And so you have average trade profit of 72.05. In recent years, it's done better. And so the volatility is picked up. This is inclusive of $25 round turn slippage and commission. So look at the annual period analysis. You can see the average trade profit as well. 175 in 2024, 125 in 2023, 144 in 2022. The bias is even greater this year to take long only trades after 11 than to take short trades or at all, or to take long trades before 11 a.m. Let's look at the monthly period analysis so we can see the recent results. Taking the same exact strategies that we've been trading, really good results, up 13K in January, up 18K in February. It makes me nervous. It still makes me nervous to take this bias, but It's something to consider after a cyclical drawdown. We've gone through a drawdown in our live trading, and so we're readjusting our portfolio, and we don't want to go from a portfolio that's in a drawdown and jump on one that's in a maximum equity peak. And as you can see here, it's right up here near equity peaks, and it's done really well in recent performance. And so you get these little blips along the way that are normal in trading, and we've had those in our current portfolio. I do anticipate a time period where we could go through a drawdown, but we may not. Maybe it'll just maybe I'm talking about the market in general, like the Nasdaq and S&P, where they go through a pullback here, making longer trades harder even after 11 in the short term, generating one of these blips right here that you see. This is the closed trade drawdown. It's not end of day drawdown. We typically measure risk on an end of day or end of month or end of quarter basis, and not based on what's happening during the day. There's a lot of fluctuations intraday, and so would anticipate maybe a blip, but maybe we're looking at some Nvidia earnings tonight. Maybe this market's pretty hot right now, so it could just skyrocket, and these long only trades could continue to still work well for a while. Eventually you're going to go through your normal drawdowns, but this is one of the things that's working the best now, and you can see this in the Portfolio Trader, isolating it using global functions. You have to have open code to test that sort of thing. I'm going to make a training video or a training section on how to set that up on your end for your strategies if you have open code. But this is what I'm showing on my side. I'm going to pause the video now after I do some screenshots to record this, and then we're going to look at this without these global variables biased, and so it just takes the long and shorts all day like we've been taking. So here we are looking at it again, the 34 strategies in the stock index portfolio, in the 250K portfolio. There's 60 strategies, but this is the stock index strategies. And you can see the difference in the equity curve recently, how much difference it makes to trade long only after 11, how big of a, it's gone through similar drawdowns. The length of this, you see how wide this is right here. These drawdowns, this drawdown is steeper, but it snaps back. And this drawdown, it's snapping back, but this is the closed trade drawdown, not an end of day drawdown. So you're not seeing as much just at zero level because you're always trading, but you are always. I'm talking about zero equity at equity peaks on a closed trade basis because there's so many trades. But the width of this is wider than we've seen in the past. This sideways period right here makes it harder to short than we've ever seen after this massive QE. For years it was harder to short, and it's gotten harder even though QE is over because the stimulus effect is still there and the market is driving higher. And so all factors, not easy to determine every reason why, but typically we talk about how the market is typically more two-sided, taking long and short trades. But what we're seeing right now is if you take long and short trades all day like we've been taking, it's been hard to make money lately. But if you only take long trades and you only enter the trades that start after 11 a.m. Eastern Standard Time or 1.5 hours into trading, then you're at equity peaks based on the previous screenshot that we had. So this is what's working in the market now and has been working since this time period. This time period is, it's made equity peaks in here, but not by much. It's kind of sideways since trade 15,984. I wish it had the date on here. So 15,984, we can find it in the trade list. So going to trade list and the portfolio calculator, 15,984 is around June of 2022. And that is the time period we talked about when the market decided that the Fed was going to pivot in mid-2022. A lot of people that listen to the Fed didn't hear the Fed say they were going to pivot, but the market decided that the Fed was going to pivot since June of 2022, and as of February 2024, even though the Fed has continued to raise rates, it's paused and it hasn't pivoted and lowered rates. The market has assumed this entire time that the Fed was going to lower rates, and with current inflation rising, they may not be the case. So we're in this environment where the market, since mid-2022, we talked about this back at that time, that the market thinks the Fed's going to pivot and lower rates, even though it's gone up and sideways since, as far as rates being raised or lowered. So very interesting. Most difficult market to short since that time period. It's gone higher. These particular strategies have gone higher, and they've made equity peaks recently. But this year, you can take a look at the results this year. Monthly period analysis, minus 2292, minus 19K. These are just the stock index strategies. Once again, in the portfolio, 60, 250K. And so, you can see, up until August, August of last year, this type of setup was still doing pretty well. Even though the rise in equity curve was slowing down, it did really well still until August. And then since that time, there was a positive November in this setup. But overall, 4 out of 6 of the last months have been down, and that's not historically what we've seen. You see some losing months, you see drawdowns, you see similar drawdown levels, depth, but not the same length. And so that is what we're looking at. The portfolio calculator, this portfolio trader, really helps us isolate what's going on with using those global variables and testing all these, how to adjust all these strategies at once. It would be difficult to do code changes to every single strategy and then put them all back into a portfolio calculator. It would take probably a solid 3 to 5 days of work just doing that, just to test one idea and then put it in the portfolio calculator. And if you want to test another idea, you'd take another 3 to 5 days. And so adjusting all the code and exporting the data and putting it in Excel. But this, with global variables, allows us to test general ideas that can be tested and then run a portfolio calculator, a portfolio level test to see. And so if you're struggling with your strategies, consider taking taking long only trades after 11 until the whatever is causing this to be so biased that alongside changes. And that change, keep in mind that change could be soon or it could be very far away. But that is what's happening in this market, and that is the portfolio. How you could use the portfolio trader in multi-charts to do similar analysis. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.